Intervention by the Fed and an injection of liquidity is always enough to get the markets moving. In today's show, we're going to have a look at the latest statement which just came out by the Fed. We're also going to have a look at whether we're in a bull market or the start of a bear market, which is a tough conversation that I know many people probably don't want to have. So smash the like button, hit the bell notification, and subscribe to the channel. We'll get straight into the show content based off of a tweet that came out yesterday. We did see a little bit of a move up within the crypto markets, attempting to take some of those key levels. The first and most notable level that we had on our chart was slightly just above $83,000, and we've seen price now reclaim that level. But it's not enough to change the daily structure. There's a lot that still needs to happen in order to shift the high time frame momentum, and the bulls really have their work cut out for them. What am I talking about? What is the tweet? It was this one over here. The Fed official just came out, a top Fed official at least, and said that the Federal Reserve is ready to help stabilize the market if needed. That little bit of hopium was enough to get degens, of course, to move straight back into the market and immediately get bidding. So we have a lot to look at in today's show. Remember, there is this whole tug of war that's currently going on with the tariff wars between America, or more specifically Trump and China. And then we're also still trying to figure out whether Jerome Powell of the Fed is a friend or enemy of Trump's, right? So it's going to be very, very interesting to see how this particular narrative does play out over the weeks to come. But I think in the short term, you probably will see some at least relief over the next couple of weeks, possibly 2 weeks, right? Remember, we're coming into the next bull moon. We've seen the success rate of that bull moon and how it typically does lead to price action bouncing in the interim, right? So there is going to be some reliefs, especially when volatility has come back down. It's relatively low again. Volumes are low. And then you're looking for some sort of a relief bounce, right? We see the gold chart, of course, playing out in fulfillment, the entirety of that cup and handle formation, which is absolutely massive. There you got the cup, there you got the handle, broke out, fully surpassed that target, met and surpassed that target in price discovery right now. And usually that's quite a scary indication that something in the markets are breaking. And that's why the Fed's coming out and essentially saying these types of things, suggesting these types of things. Gold being one of the highest liquid markets in the entire world with the most trading volume that's out there. If you are looking to trade these markets, right, by the way, Bybit have offered gold, right? They offer gold over here where you can unlock a special deal, unlock $1,000 position airdrop by depositing and trading, right? It's all linked in the description below. Go through into the YouTube section below over there if you want to take advantage and trade gold. By the way, when it comes to gold, I'm looking at the possibility of a exhausted move some point soon on gold, right? So we'll be paying close attention on the low time frames, looking for any kind of a break of structure. Right now, it's maintaining absolutely perfectly all the high highs and high lows. You can just see constantly pushing up, right? So we need to see a break below this. Then we'll see exhaustion of the trend, and then you can actually start to look to take possible short trades. Now, the big question, right? Is this the start of a bear market or mini bear market, whatever it is you want to label it, or are we still in a bull run? When it comes to the stock market definition of a bear market, you're looking for at least 20% pullback in traditional assets and price suppression for a couple of months. I think it's something like 6 months is probably what Investopedia says, right? Now, we have seen things like that in many of the stocks. We've met the 20% drawdown criteria. So I guess by that definition, it's in a bear market. Is it going to be an extended bear market or a mini bear market? That's the question, right? And then when it comes to cryptos, you're looking for, 40% probably at least on Bitcoin, 40 to 60% correction on Bitcoin, sustained within that range for prolonged periods of time. That would classify as a mini bear market. Altcoins going down, anywhere between 75 and 95% considers that a bear market, and that we've actually already seen. So we have to ask that serious question, right? Is this the start of the bear market? The short answer is that we don't have enough information yet, and I don't exactly know. But what I can provide you with is what to look out for next. And if you see these things play out, then you have your answer that probably the answer is yes. And it's all about weighing up the probabilities, right? Is the probability higher that we're in the start of a bear market or that we're going to continue this bull run? I'll let you be the judge of that following this next chart, right? And the chart that I'm about to bring up has a pretty high success rate over time, and it's the MAC.D on a high time frame, right? So first and foremost, we saw the MAC.D bearish crosses over here, which essentially initiated all of the prior bear markets, right? On the 2-week scale, we've seen it on the weekly scale. We've now just seen it cross on the 3-week scale. You can see over there, we had the 3-week candle close a couple of days ago, and you can see bearish cross has been confirmed. And if you look in relation to this chart over here, and we'll just quickly map this out, you can see the last time that crossed over there, you led into the bear market. You can see the last time that it crossed over there, you led into the bear market. And once again, we have crossed. And I've put on the Heikin-Ashi candlesticks over here, which just smooths out the chart a little bit. The question is, is this the start of the bear market? Well, we have to look at a couple of additional confluent factors, which is something that we always bring into the show content. And not only that, but I've also brought into Whale School, right? If you do go into Whale School and you specifically go into the section over here, let's just scroll down. Here we go. Moving average exponential and or moving averages and exponential moving average strategies. When you do go into this, and you can look at the weekly EMA strategy, this is something that I cover extensively over here. And if you go through this, we talk about the hit rate of using the 21 weekly exponential as a guide to determine, are you in a bull market or bear market, right? Of course, we need to take things a step further. And when we do take things a step further, what you can see is theoretically, you've met the 5-wave count of an Elliott wave move, right? Markets ebb and flow. Markets move through typically 3 moves towards the upside, 2 moves towards the downside, and then you come into a major correction. So wave 1, wave 2, wave 3, wave 4, and wave 5, and that wave 5 could potentially be complete. Unfortunately, you have to take out wave 4 in order to fully confirm that, and by that point, it's too late. So the next thing that you need to be looking out for is if it is the end of a wave 5 count over here, you could still theoretically play the long side off of the ABC correction. And we'll talk about how that could be found right around here, or possibly very, very soon, if not already, right? So wave or at least move A to B in terms of the corrective move, you would expect would find major resistance between $95,000 and $100,000. If you do find major resistance between $95,000 and $100,000 and you begin to reject over there, that is probably a confirmation that you're going to put in the B to C corrective wave, which could take Bitcoin all the way down to $40,000. And with the MAC.D moving averages on a 3-week scale coming from such an extended height, it probably means rapid acceleration towards the downside. And you would only expect that move to reach its end once those moving averages actually cross the 0 line. As you've seen previously, right? The moving averages need to cross the 0 line. The moving averages need to cross the 0 line, same as in the prior cycle over there. So it is a major warning signal. It's something quite scary that's currently taking place on the charts, and the trend is your friend until the very end of that trend. However, again, this is why you play both the long and the short side, right? So you'd essentially be playing the long side from the key support over here from the A to the B into the B phase over here. And then if you're wrong, of course, you leave the long position to continue up, and then you would extend this wave 5 like this, right? Then you would extend the wave 5. Let's just quickly pull that up. There we go. Like this. The wave 5 could possibly extend further out. It is possible. But is it probable? That is the big question that you need to be asking yourself. And what I do want to remind you of as well is if we do go now onto the monthly, well, the monthly is no different, right? By the time the monthly crosses, it's usually too late within that market cycle, and you well on your way into the bear market, right? You can see once the monthly is crossed every single time, crypto was in a bear market, or Bitcoin was in a bear market. So using our moving averages to keep us safe, we are coming into key resistance exactly where we are right now. Although it feels very, very exciting because some of the low time frames are shifting, the high time frames remain unchanged, right? And still your most key level of support is around that $68,000 to $72,000 region. If you are able to start to reclaim and hold back above $92,000 with multiple closing candles, then you start to shift the sentiment and the structure, right? So things that we're looking out for over here, we got our daily range. We said this is the main level to reclaim $89,000 to shift that daily structure. When we use a volume profile over the course of this entire choppy period from just before the Trump inauguration, we had the big move towards the upside. It started to get priced in that Trump was winning the election. And now we've almost fully retraced that. Most of the coins have fully retraced the initial move. Bitcoin has still managed to hold up that key level just below $68,000 with our fair value gap still untagged, right? So there is still one more possibility that you reject over here. I have drawn this trend line as absolutely conservatively as possible, right? Using the wick candles over there, which means, if you're a bear, pretty much you can't say that once you have any closing candles above this, that this downtrend persists any longer. A break of this downsloping trend line does not necessarily mean that the bull run is back on. It simply means a shift in momentum. That momentum is shifting from extremely bearish into neutral, and then possibly can start to look at high prices, right? So what do bulls need to see? Bulls need to see this. Basically, bulls need to see a big move up over here, break above that $89,000 region that was taken from the Wednesday candle high. It's this one over here. That's your Wednesday high in most of the charts. And then we'll see if the next high low does hold. If the next high low forms, that's probably where you would start to establish some of your positions, right? For the next bounce up into the $95,000 to $100,000 region. So that's what we're looking at on the daily time frame. 24-hour liquidations have come down significantly now at around $250 million, which is relatively low, right? Usually following these very, very low volume periods, the market is prepping for the next big move, right? So you want to be adequately positioned on the right side of the trade before that next big move happens, right? And the order books have been completely wiped on both the long and the short sides in terms of liquidations. Liquidity has been taken both above and below, and this creates the opportunity for a massive move to take place. Again, direction neutral right now, but we are seeing some small signs and shifts. Right now, you have to give marginal edge still to the bears to be in terms of being in control. Why? Because the trend is your friend until the end, and the trend still does remain towards the downside on the daily and above, right? We're also having a look at this chart over here, which is the daily exchange volume. And I said, if you could just put an imaginary trend line down there, the key levels to reclaim is going to be about 75 billion, because you'll break that downtrend. And on top of that, you'll start to reclaim some key horizontals. So I did that for you guys. It would look like this. This is what you're looking for. You're looking to break that downsloping trend line. You can see support, resistance over here, right at that $75 billion mark. We want to see more volume come into the market and the bulls to essentially take control if you do want to see price shift bullish. So in order for that to happen, we need all these things to take place, right? We need to see a break of this trend line. We need to see this chart reclaim back above this key level. This is not only your mid-range, it's also the death cross level over here. You can see between the 50 and 200 EMA, which is crossed towards the downside, which will be acting as major resistance. And it's the downsloping trend line, which you can see the chart is firmly in a bearish channel, right? In a parallel channel, bearish channel, finding support at the mid-range, coming to this key level. So I like this as a major confluent region. If it did move down one more time, if you got one more rejection, I think this would be an absolutely formidable support level. But you do have to acknowledge that small things are shifting, right? Why? One of the things that we have to look at over here is the RSI. The RSI on the daily was going to be one of our early leads as to where the bulls were potentially going to strike and attempt to take back control. And what we're seeing over here is this orange line that's coming down has been the downtrend, with now our first candle close above. So it's the first time that the bulls have broken that level. But if you do mark at the 50 level, which is always significant when reading the RSI, you are coming directly into resistance over there. And similar to Bitcoin, this is still in a downtrend with a series of lower lows and lower highs, right? Lower lows and lower highs. So really, this is the level to reclaim. And this is just the first sign, right? The first sign that something very, very small is beginning to shift. So if we quickly zoom out over here and we bring up our chart, what we'll notice is that we're about to see a bull moon print, right? So will the bulls have enough momentum? The bull moon arrives tomorrow. So sometime very, very, very soon, we could actually see that attempt to break through all of these key levels. And we're seeing some really nice structure shifts on the lower timeframes. Like on the 4-hour time frame, we've seen the move up and now officially a break through that resistance level. And you can see how bulls are attempting to hold that as support. What I'd be viewing is if you do get a pullback now into the Monday high and it manages to hold that Monday high, you have a clear long trade setup with your stop loss underneath these candle lows. So stop loss now could be raised from what we previously discussed over there to stop loss being placed underneath these candles over here at about $77,000. And essentially, you'd be looking for the long trade to trade it up into the yearly open, which is going to take you around that $95,000 region. I do want to remind you that that is still possible, that you're playing out the A, B, phase, right, of the corrective move. Remember, $95,000 to $100,000 region could theoretically still put in a complacency bounce and a lower high on the higher timeframes. And this is something that you absolutely have to pay attention to, given that we have the 3-week MAC.D bearish cross. So a lot to play for, a lot going on over here. All I can say is, guys, if you do want to learn more, if you're serious about your education and you want to understand this in a bit more detail, please market proof your trading strategies. Join 𝗪𝗀 over here. There's a link in the description below. You actually have to go through to that link. Use any one of the exchange links below. Sign up over there and then come through to 𝗪𝗀. Click that. Sign up, if you want to outperform 99% of the market, which, believe it or not, even something as simple as this strategy over here will outperform the majority of so-called professional traders. And it's giving you a signal right now, right? So I'll show you in the course how to put it all together. The 4-hour downtrend still persists, but again, tying this all in over here, if you can pull back into the Monday high, which is going to be around that $81,500, and you can find and hold support over there, there's a worthwhile long trade to take up. Not only that, but I've actually measured out with a fib from the low to the high, and you'll notice that you have your 50% level and your 618. So if you can get a pullback into that 618, that could be a favorable long setup. Even though it's over the course of a weekend, it is risky, but it's still worthwhile because of these shifts coming up in place, right? The bull moon, the RSI breaking for the first time above some of those key levels. These are notable things that we have to be paying attention to, right? We haven't seen that happen for many, many, many months now, right? So that should get you back above the 200 EMA, which would shift things back towards the upside. And I guess your next confirmation would be if you can start to see the USDT dominance breaking below these key levels, right? If it can break this parallel channel towards the downside, then this is money flowing out of USDT back into the crypto markets, right? And then you'll start to see that move. Now, if you're worried that you're going to miss the exact bottom, I also, again, want to remind you, when in doubt, zoom out to get a bit of perspective. This is the ETH BTC chart. You have not missed anything. If the market were to flip back bullish and Bitcoin moved back into new all-time highs and the bull run we're back on, there's still a long way to go for things like ETH BTC, and a lot of profits that can still be made over here, right? Especially when you see the breakdown in the Bitcoin dominance chart, which we're still waiting for, right? Bitcoin dominance still rising over here powerfully towards the upside, similar to gold, right? Just continuously grinding. You always keep wondering, how much further can this thing really go? Well, the key overhead targets over here is going to be the 0.786 on the fib levels, and that's about 66%. So should you ape in right now with all of your money? Absolutely not. Take it as it comes. If you get the pullback over here, that's a potential long setup to trade it back towards the top side. But remember, you would be trading the 4-hour chart long counter to the daily trend, which is in a downtrend, which should be short, right? So usually when you trade, you want these things to be in alignment for the best success, right? For best results, you typically want to see something like this. You want the weekly to be maintaining an uptrend. You want the daily to be maintaining an uptrend. And then you want the 4-hour to be in an uptrend. And then you want to try and time the high lows all together, right? If you can get a 4-hour on the 4-hour chart, a high low that lines up with the daily high low and the weekly high low, then you have a great trade opportunity over there. Right now, we don't see that, right? We have some of the high timeframes towards the downside, but the low timeframes have started to shift with an official break of structure and a change of character on the 4-hour chart. So if you do want to learn more, guys, jump into 𝗪𝗀. All the information is there for you. And if you want to go the extra step further, remember, follow the 𝗪𝗀𝗡𝗪𝗔𝗟𝗘 Twitter account. We'll quickly go to that over here. So go through to the Whale Room Twitter account. Let's quickly pull that up for you. Because we're doing giveaways, right? We're doing giveaways over here. Go and follow this. You can see only 1,425 people, right? Very few. We're dropping constant alpha over here. So if you want educational content as well, and we're giving away free codes where you can jump into Whale Room, which is the Discord, for absolutely free. So thank you very much for joining. Appreciate each and every single one of you. That is it from me. I'll catch you all on the next one. Have a stellar weekend, and we'll see how things look come Monday. Cheers for now.